So this is a very near and dear topic that's very close to me. I've been in the startup space for 15 years. I saw the space kind of go from VC, institutional VC only, kind of some smaller angels to like widespread industry to now alternatives means of funding. And it's been cool to see like DAOs raise money. It's been cool to see like ICOs happen back in 2017, then NFTs being used to raise money, now meme coins being used to raise money. There's like many, many ways to raise money. And also grants, both kind of in Web 2 and Web 3 have been a thing for a while now. So I'm really excited to have such a kind of diverse panel to talk about what funding looks like today, what you can expect when going out there to raise money, and what are different ways to do it. But before we dive in, I would like each of you guys to introduce yourselves, like 1 minute, tell everyone who you are, what projects you're working on, why you're here, and then we'll jump into questions.
I guess
you can
I
start.
start. Yeah. I'm Alena. Alena Yudina, head of growth at ICB Labs. I'm based in Switzerland and in the space since 2017. So yes, we've seen quite a lot what was going on and what how it radically transforms now with AI. And thanks to your speech now. At ICB Labs, we're building the ecosystem. So when we invest into something from our group of companies, one of the key point is the ecosystem compatibility with us. But since we are in the Ethereum community, and it's pretty easy to match the criteria. So I would say this conversation can be pretty wide and open, and I can't wait for it.
Pass the mic. You have to press the button. There you go.
Hello, I'm Daniel. I'm in crypto since 2017, working full-time. I was with Consensus, I was a developer, security auditor, founder. Now I'm working with a VC, with Eden Block. We invest in decentralized AI. Still very, very technical. Happy to be here.
Do we need to start with, I'm in crypto since blah? Okay.
Yeah, this is a pattern now.
I think it's the de facto introduction in conferences. I'm Paulo. I'm a designer by training and by professional experience. I was doing design stuff, and then I was trying to manage a company of designers, and I figured out I didn't know how to do it, so I found out about DAOs, and that's how I got into Ethereum in 2016 with the first DAO. I'm not in crypto because of the financial speculation. I'm in crypto to try to solve governance and how we govern ourselves as human beings without killing each other. And I'm doing DAO tooling apps right now, an app called Proposals.app that's focused on DAO governance specifically for Arbitrum DAO, and I'm also a delegate at Arbitrum DAO. And my life is basically arguing with people on the internet about how to decide stuff. And yeah, that's me.
Hi everyone, I'm Danny. I've been in games since 2007, engineer at heart, and since 2019 I'm building WAM. Since 2021 I decided that my life was too easy, so I started doing stuff in crypto and blockchain. And as you can see, I'm actually 23 years old, but I look like I'm 60. Our purpose is to build the next generation platform for games where people can have fun and have the benefits of Web3 at the same time. We've been the #1 dApp on BNB chain when we actually launched it. I think it was 2023. We grew quite a bit, and now we're preparing for the next iteration of what we're building, which is tooling and a real platform where games can combine Web3 technology to reach audiences that love this type of evolution.
Great, thanks guys. Lots of diverse experience backgrounds here, so I'm excited about the questions I'm going to ask. So if you were to advise startups today, like what's the most effective way for Ethereum-based projects, startups to approach funding in 2025? And we can start with whomever has a strong opinion on it, or whoever wants to go first. I have no kind of preference.
So yeah, I can start. Related to funding, since we are the ones who try to fund projects, we've gone over the protocol first launch. This is not necessarily exciting anymore, at least for us. We now want to see a lot more traction. You want to see a lot more need in the market, and not necessarily like developers. A lot of times try to solve problems for people who are not actually there. They don't really feel that problem strong enough in order to pay for it and use it and maybe change their behavior a little bit. So traction is important. We've seen a lot of projects doing partnerships, but then you don't really know exactly what the level of partnership is. Everybody is, partnering with Optimism, but yeah, you're an L3 on Optimism. It's not really partnership. You're paying them. So partnerships don't really mean that much, but traction, users, growth is important. What I really like to see is also technology. We love to invest in difficult technology problems and people who can actually solve them. And then it's extremely important that you have good business development people and you know how to sell to your users. Those are extremely important things. Marketing and other things can come after that, but if you can provide these two, I think that's great.
Awesome. You can leave the mic on, I think.
I want to answer as business developer. First of all, thank you. But I disagree with you about the partnerships. It is important to mention what level of the partnership and how you actually integrate it, what it gives to your community, yes, but the partnerships matter because that literally gives you the horizontal growth for the community engaging with other communities, and you can see how the project actually interacts with others and whether it's capable of finding your own place in the Ethereum ecosystem. And working with the Ethereum community is pretty easy because we all support each other pretty well, I think. So I absolutely agree with you with everything besides that little point.
I love it when panelists disagree. I live for it. How about you guys?
You can go. I'm on the project side, so from this respect, I would tell you how I would do it again if I were to rewind time. Given that crypto is all about community, and now we have AI agents. By the way, we have AI agents that can solve the business development problem. So if you're devs and hate doing business development, just create an agentic business developer and pray for good stuff. I would do community first and solve. There are two ways to solving problems and then addressing them. Either I have the problem or you guys have the problem. The easier way for an engineer is to be really, really frustrated with a lot of things and just pick one and solve it. And by solving it, you just address the community and then see how many people share your problem and also want to pay you for the problem that you have solved. And going in this stepped approach, the need for funding comes at a bit later date, where the people that do the funding also can see this traction. I would call this traction, actually, because you're gathering people that see value in what you do. And then the discussion about, okay, how the funding works, what's its structure, and what's its value is a lot easier. So this is, if I were to pick how I would get funded, these are the steps that I would take in order to get these guys to give me a lot of money.
Awesome.
So, conclusion, you either trick a VC into giving you money, or you trick a community, public goods funding, a DAO, a grants program to give you money. So those are the two paths. I've been through both, actually. So maybe I can do a comparison. Yeah, I would say that there's a lot of dumb money in crypto. A lot of people investing just because they have spare money to invest, which is not a good thing to do. As a founder, if you take that money, you should be aware that you're doing it with a lot of strings attached and a lot of debt with that as well. So you should look for VCs that are aligned with what you're doing and that actually would support you and would fight for you and would bring more value than just the money. There's not a lot of those, in my opinion, from my experience. Also, if you go to the public goods route or public funding or trying to get grants, it's also a mess. And it usually defaults to, oh, you need to know who is the person on the council that decides the grant, that would approve the grant and apply in this particular way, in this particular time, and so on and so forth. So it's also tough. Either way, for founders that are building stuff, I would suggest highly to have a hard look at what you're doing and think if there's really a business model there or not. Most of the times there isn't, especially in crypto, where people build stuff just because they want to scratch their own itch. So try to figure out the business model first and then go looking for funding as well.
Thank you. I just one thing to add here is even if you figure out your business model, the market might change on you as you're building. So that's something to consider as well. But moving on to kind of the specifics of it, we've mentioned DAOs a few times in the conversation already. We have it in the title of the the panel itself. How do people approach DAOs versus startups, especially from a VC perspective? How should founders think about choosing a DAO path versus a startup path? What are some of the pros and cons of each?
Can I start? From perspective of Switzerland, I can tell you that we've seen there all possible variations of structure in DAO. And one of the most appreciated now from the VC perspective, I don't know about all the VCs, but at least those which we were in contact with and we saw the feedback, is when you have the actual DAO structure, but at the same time you have a certain centralization part which has the legal entity behind. In Switzerland, it's possible to do so, and Switzerland is a super crypto-friendly jurisdiction. You know, all Ethereum Foundation is our at home there. So the structuring of DAO, I think, one of the key components, and if you have done it right, if you went through this unpleasant legal process, then the rest is less of a problem. And then you actually bridge both because you have one component over another.
But is there any is there any preference of a DAO versus a traditional startup from your perspective?
It very much depends on the project and business model, how they see themselves. I think when it comes to the governance, the DAO is crucially important.
And it is a mess. So I'm both a delegate in Arbitrum DAO. Arbitrum DAO might be the biggest, the DAO with most proposals, with most people engaging and so on. So it's a good representation of what the DAO could be. It's going through some changes right now, so that's another conversation. But I'm also a builder for Arbitrum DAO. So the app that I'm building is to serve Arbitrum, and it is funded by Arbitrum. And we just posted a proposal 2 weeks ago to get more funding that was rejected. But basically the process from the builder point of view was put the proposal on the forum, answer to 60 comments saying that it's too expensive and explaining why we are charging this amount or asking for this amount for a week. During that week of discussion with delegates that were trying to undercut us and get us to do it for cheaper, we actually started building the thing and we almost did the thing that we wanted to propose. Then it went to a vote. The small delegates voted for, the big delegates still don't want to spend money because we're not in a good place in the market right now. So it's a very frustrating process as a builder to try to get money from DAOs to fund what you're building, even if you're super aligned with the DAO and you are building something exclusive for them in this current time, because since the regulatory space around DAOs got more, let's say, laissez-faire, because someone got in power in the US and crime is legal. DAOs are being through a restructure in general, because the main reason why protocols created DAOs a few years ago was to have legal shielding, as in we don't control the protocol, the DAO controls the protocol. But now they don't really need it, since the president of the United States is launching meme coins. I guess it's okay to be overt about controlling the protocol. So yeah, DAOs are going through a restructure. So it's also very tough for a builder to get funding from DAOs right now, I would say.
Ourselves as VCs, we care mostly about equity when we invest. Tokens or DAOs are kind of let's say a bonus. DAOs are very messy. There are lots of people who have to agree, and that's always something difficult. When you have to make decisions, it's annoying, and I agree with you saying that you can create two different entities, one that controls the equity and one that controls the DAO, or is a representation of the DAO, and that works mostly fine. I think I saw this first with Uniswap. I think that was very smart.
What about you, Danny?
Can you please repeat the question so I'm sure?
So should people go with DAOs or startup classic way? Is that like something that matters when it comes to raising capital?
Okay. My expertise is with crypto VCs. That translates into PTSD. So there's no DAOs in my expertise, but I've researched quite a bit. We've researched it. We were thinking in approaching DAOs, but when we saw the process and also the amount of effort plus the potential revenue, we kind of quit. Now, given that we just spoke about agentic stuff, agentic DAOs that can make decisions, this is one other thing because they're messy, right? So people have to make decisions. I would say that if you're a startup today, the need for funding is not that stringent at the beginning, but it also depends on how you want to start. If you want to start like the traditional VC style where you have I don't know, big amounts of cash at the beginning, you can hire a team and go punch the idea, or you can go the other way around where you start solving the problem, get the traction, and then you can figure it out. If you go this route, DAOs, I would say, are not necessarily useful in the beginning because they can be messy. I just did the research, and the acceptance process or the approval process about 20 to 30%, and it's quite messy. It takes a lot of time, and it can actually hinder your product development. Plus, if you're doing grant hopping from DAO to see which one bites, again, this kind of steals your time and focus, and you have to do that. I would say neither at the beginning. If you start with the problem and iterate small enough just to prove point after point after point, and then it's a bit more streamlined in getting people on board, and then I would say money comes. One guy from the US I met told me this when I thought I needed US money. He said, look, money always finds good companies and good projects. I would agree with that, but I have a question for you in the audience. Who is building and looking for money? Okay. So these are actually great points in the panel. I hope they're useful to you guys, but I would go with the smaller route. Also because the type of pressure, by the way, community pressure sucks. Makes no sense. And crypto community pressure, not building community pressure, it's like living with, I don't know, rackets in your house, like 10 rackets in your house, and they watch you when you go to sleep and when you go to the bathroom and when you wake up, and they're there, they never sleep.
You owe me money.
You owe me, not money, you owe me like
The moon.
I put $100, when's my Lambo? So in this respect, funding from the public before its time can be detrimental to a project.
So I think that's a good segue into kind of the misconception.
I have a counterpoint to that.
Go ahead.
I have a counterpoint to that. So I understand, like, we kind of discussed like two ways. You either start small or you go to the VC. You can start small and you can self-fund and you're gonna own everything and you just keep building. There's a big risk if there's another team that they start, maybe they don't even start building. The idea is good enough, they know how to sell it, and then they raise $10 million, and then you're fighting people with $10 million in their bank who can start hiring and start hitting, fighting this much faster than you. And it becomes really scary to find that team. We have had teams that were pretty well funded. They still had money in the bank, but they started to see other teams in the space raising tens of millions of dollars, and they became scared. So what they had to do was raise even more.
Fair point. I had this fear. I honestly had this fear. And there's a belief when you're building that the bigger team that gets the funds will outsmart you, outcompete you, out whatnot. And it might happen. But what I meant when I said starting small, it's just for the first steps. By the way, just to build the confidence that you can do it. So this is really important. You solve things, you get to the next level, and then the next level you kill the next boss. Difficulty, I'm doing game references because this is my life. And once you do that, until you are at a certain point, nobody cares. Nobody in the VC world, nobody competes with you, nobody absolutely cares. And then you can do that. But one thing that I experienced is no matter how well funded a team is, especially if they're good at selling, they're really, really good at selling, and they brought in a lot of cash, but the audience or the people that they're doing stuff for does not connect with what you're building, that money can be thrown out the window. Of course, you will always have competition. Just think of it like this. Smart contracts are like building blocks. You can make a smart contract, and then I can use it, and you can use it, and everybody can just build on top of it. So in terms of competition, it's always there, right? But what I see differentiates crypto and blockchain development and the entire philosophy is that if you build it properly for the right audience that just loves the way you do it, of course, how you do it is important, they will stick around. And that funding in crypto is not like everybody's building a blockchain. That's where you need like a lot of funding, right? You need liquidity and you need a lot of engineers. Most of the times there are simpler things that don't require that amount of capital. Of course, having a big partner with funds is absolutely crucial. But in crypto, finding the right partner is just like finding a unicorn with not one horn, two horns. Because most of them are in the game for the short games, right?
Yeah, I feel like this is going to be like a recurring theme. Is like find the right partner. Like I've heard it 4 times in the past like 10, 15 minutes. Great, interesting kind of way of looking at it. Is like, well, you can take money from anyone, but you should choose where you take money from. Are there other misconceptions that I don't know, maybe Elena can share some, or Paolo, that people know about like raising funding and we should stay away from, or you have a different opinion on? Like, what are common misconceptions that you hear in the space?
I think a lot of people think it's easy to raise money in crypto, or depending on the market cycle, right? If it's a bull market or a bear market or whatever. Last time I raised funds, it turns out it was in August 2023, and it was the worst month to raise funds in crypto in the last 8 years. But we only figured out... It was
the worst to raise money in general.
In general. But we only figured out it was the worst month after we did. And so we're like, oh, okay, this is interesting. Because we just went with a brute force approach to, to try to do it. We did 80 versions of the pitch. We pitched 130 something VCs, and it's not as easy as it sometimes looks. So one misconception is that in crypto it's easy to raise VC, and I don't think it is. Yeah.
Right. Elena, or Danny?
So I think grants don't mean validation. Winning a hackathon also doesn't mean validation. I've judged a few hackathons. I'm very happy to give first prizes to fun, interesting projects, but that don't necessarily translate into products after that. But it's a different type of contest there. I agree with you, it's very hard to hear 129 times no, and then still hope for the next yes.
I would add partnerships. We talk a lot about people, and one of the misconceptions, which is not yet that strong, but it's definitely coming that way, is using technologies, AI especially, can help you to use less manpower, or team means less, because you kind of are technically strong by AI. I think this is absolutely wrong, and as you were just saying, AI needs a double check and proof, and literally all the technology still needs, I don't know how long, but still at the moment needs the human proof. So the team matters, no matter how many technical agents you have, or technically strong you are, team matters, and this is something that nobody should forget. I would call it that way into future.
Yeah, that's a great point. So we talked about team. Let's talk about community a little bit. We talked about kind of was it rackets that you sleep with if you're raising from a community. Like, what are some of the ways that community plays a role in fundraising? Should they play a role in fundraising? Do you want to have that kind of dynamics? What does that make sense versus not make sense?
So you're asking if the community, you should raise from the community?
Not necessarily, no. You can how can you involve the community? Like, okay, asking them for money is like a most straightforward thing, but like how else can people work with the community to help them raise capital?
Definitely, I would say, and you guys can contradict me if I'm lying or talking shit, but community engagement and community involvement in the project matters a lot, because then as a VC, as an entity that gives you money to make more money, they can actually foresee what the risk of giving you money is. If you have an engaged, active community that has been there not because of the token launch that you just did and they're hoping to make $1 million, then the value actually is higher than doing it without a community. But the reality is there are all sorts of flavors in doing startupping and doing the work with the community and with the VCs. I would say, to get money from a VC is a lot more important to know the people personally, and I don't know how, to have a personal relationship is a lot more important than all these things. Why? Because then there's a connection being formed. They can smell if you're bullshitting, or you can smell if they're not the right fit. And when these two check out, there's a higher possibility and chance that a deal might happen. Of course, it's not guaranteed, but at the same time, doing the opposite, I did the opposite, not knowing people, right? Just knocking on doors. Well, it's a good way to be frustrated for quite a bit of time.
I think that community is very often underestimated, because community is that engine that helps you to test all the ideas, to help you to test the scale of it, how quickly it can grow, market fit. Literally anything you want to do, community comes and helps you to see whether yes or no, how it really would fit. In all possible scenarios, technology, social proof, acceptance, market fit, even financial understanding, because to raise the money from VCs, you need to explain the idea. If you can explain this idea to your own community, then you can see whether they really understand it, how it's understandable. And then you go already to financial professionals, and if they tell you, oh no, your idea is not good, you already have the answer, because you have the feedback from your own community. And this dialogue is crucially important, and it needs to be not one time before you raise the funds, it needs to be all the time coming over and over again when you build up the product. So at ICB Labs, a community is one of the strongest things we have. And we have communities in different regions because we tested over there. And there are certain, as I was mentioning, there is the ecosystem that we have. So each product of the ecosystem has own community, because literally it's the own target audience. And in my personal understanding, as professional business developer and working from community perspective with the ICB Labs, I can tell you it helps so much. And I think when the VC sees how you work with the community, they can see whether they can trust you the funds or whether you see the future and how you see the future. It proves a lot.
I would add that from a builder perspective or a product development perspective, you kind of need three things. You need the technology to work, to do what it says it does. You need a good user experience so that people can use it and enjoy it. And you need distribution. And that's where I see the community part fitting in on the distribution part, because in the old Web 2 startup days, for you to have distribution, you would have to, hire people to do SEO optimizations and Google ads and Facebook ads and whatever, and spend a bunch of money in acquiring users. In Web3, we figured out this way of, let's build a community first, and they will be advocates for our product, and they will be the ambassadors and evangelizers and so on. And I think a lot of teams in the space don't do that because they think, if I just build the product and it works, it will be enough and people will come. But that never happens. So we do need to think about distribution from early on when we're building new stuff, because otherwise we build stuff but nobody uses it. And having a community that likes your product and uses it and provides feedback and helps evolve it, it's actually like a third of the whole thing, I would say.
So building communities, mostly posting memes. But community sometimes doesn't matter if you're selling to businesses. Like your community is other companies. So you're not gonna talk to them the same. You're not gonna have the same kind of relationship. So it's very, very different. And we shouldn't forget that the business to business exists and it's still very, very valid.
You mean posting memes on LinkedIn then?
Yes, posting memes.
Yeah,
on LinkedIn.
exactly. Like video in the morning. Like I had breakfast. Here's my hot take on like B2B.
B2B
growth.
sales, exactly.
Yeah. No, I totally get it. But like seriously, like coming back to the B2B side, like no one got excited and said, I want to like build a community around this API that does this like optimization for this. No, that's not community. Totally agree. So I think there's flavors and ways to do it.
Now you made me curious to find out if there's an API enthusiast community.
There is in San Francisco. I can show you one. There's an MLOps community that's thriving right in San Francisco, and MLOps is one of the most incredibly difficult things that you can do, like server-side kind of engineering. So anyway, you can find communities for everything, and I think that's the take that I would bring to like this particular topic is find the community, don't build it initially. If you can find it, if you can like help it, and it'll help you back. It'll give you back rewards as a consequence of you helping them. So we've mentioned a few funding methods. I've heard hackathons, I've heard grants, I've heard like DAO raising money from the community, I've heard VC money. Like, how can people building in the space navigate, like how to choose your right funding method? Like beyond kind of the chemistry and like I don't know, are you aligned on objectives? Is there anything else beyond that you guys want to add? How should builders think about that?
Like building something that actually generates profit. I think it's a wild idea,
Hot take,
yeah,
profit.
Hot take. build a business that actually generates profit, as transaction fees that you get or whatever.
Add value.
It's funny that you introduced the subject with all the ways of companies getting money, except like the one that we know for 1,000 years, which is build something that has value that people pay for. It's actually, it bothers me a lot that in crypto, even crypto users just assume that everything should be free and they shouldn't pay for anything, right? And so as a builder, when you're trying to have your own revenue source and your own business model, and you try to charge people for their service, it's always like, there must be a free alternative to this. That's the usual reaction from users. And I think it stems from the huge hype that we had in the beginning of our space of everything was VC funded, everything was subsidized, and users would get everything for free, and we got hooked on this idea, and therefore builders followed that mindset, and now they don't think so much about I'm building something and maybe I should find our own revenue source on things, and that's not good.
All right, then prioritize profit.
I want to add something to that, to the free part. There's free and then there's pay for each engagement. There's something in between that actually works really well. So because like for me, it's very painful for the user to pay for each kind of interaction. You have to decide, okay, I'm gonna use this, I'm gonna pay a fraction of a cent or $1 for this again. And there is one thing that works, I hate it, but it works, it's subscriptions. So you pay once, but then you don't have to decide every time to pay for each interaction again. The interactions are included. And subscriptions seem to work really well.
Thank you. I would lead it slightly different direction. I would think about it, and I meet very often actually this kind of people, which are like, usually it's this kind of profile. A person is about like in 20s, beginning or mid 20s, and says, oh, I have this and this idea, and I have this and this team, and we are almost ready, we want to raise funds now. So how can we raise, like, I don't know, 200,000, 1 million, 10 million? Everybody has their own expectations. And then first thing I ask is, what do you do? Where do you go to actually meet people to pitch your idea or to test the pitching of your idea? And then they say, oh, but actually there are different answers. Many people go everywhere, but many people don't go. And one of the problems that I see is the founders, it's pretty difficult when the founder can't talk, can't pitch, can't be socializing, can't socialize and can't network himself, and leaves it all to investor relations or business developer guys, because they all don't matter if the founder can't talk. And this is number one, because when you can talk, then you come to every conference, you are here today. That means that you want it. You are there, you're at every single opportunity you see to pitch your idea, to test, to see whether you find the right partner. And then you will see whether it will be the accelerator, whether it will be some community-funded program, or community itself, or VCs, or something else, or will be strategic investor who will be just like, that's exactly what I wanted to invest my million into, in you and your team. I was waiting for you. And maybe he doesn't have more than that million, but he wanted exactly that. And only way to test it is to be out as a founder. And there is no other way, there is no alternative to that.
I would say there are two types of funding. You either build a B2C or a B2B. Depending on which type of startup you're building, the necessity of funding is different, and the people that you're addressing for funding are different people with different objectives, different risk appetites. And if you summarize, okay, what funding is, some guys trusting you with money that they most of the times don't take from their own pockets, they take from other people's pockets, and they have to invest responsibly to get a return. Now, depending on the type of fund, if it's a really risky fund, if it's something that is very, I don't know, invests in visionary things, they may fund really huge amounts of money, but for hard problems, not for simple ones. So there are a lot of variables into, okay, what am I building? Who do I need money from? And based on these variables, you can better attune yourself with the people that give out the money. So you can actually filter out, okay, it makes no sense, for instance, for a B2C guy that builds a product to speak with funds that invest mostly in B2B. You're wasting time. And one of the things that I've noticed is that you're wasting time if you're talking with people that don't decide the money that's being given. This is one other thing. So there are a lot of do's and don'ts, but we're in Web3. If it's a B2B product, you may need funding because you need access to other companies, and you need sales. Basically, this is what most likely you need money for. Now with AI, engineering is important, but you have a big help and costs go lower. And if you build a B2C product, the community way, you have some people that cheer for you. You go show the VCs, okay, we have people that use us, love us, give money. So this is how I see it.
Cool. So let's assume that everything went well. You raise money. You raise money from like all these sources, maybe like VC, maybe grants, maybe hackathons, maybe all of the above. You have money in the bank, in your wallet, wherever you raised. What happens next? Like, how should a founder or a team should approach treasury management? Because I think that's a lot of the hidden or silent killer, especially in our space. What's your take on this?
So continuing on the story that I was telling before, that we raised money and so on, the follow-up on the story is that we realized that the 3 founders couldn't get along, and so we shut down the company and we gave the money back to the investors. So one of the things that I would advise and warn about is starting a company and funding a company with other people is like a marriage, and so you should really vet the people that you're building stuff with and not do it after raising funds, ideally. But the number one reason why startups fail is founder issues, right? And so most of the times it's not the technology, it's not the product, it's not even the distribution of the users and so on, is the human relationship between the people that are leading the company, and that they, if they have or not an aligned vision and aligned values and so on. And I think that's something that in this space where there's a lot of stories of, oh, we just met at an hackathon and we built something on an hackathon, we won the hackathon, we got some validation, then we started talking to the VCs and we got some money, and now we're going to build a company for the next 10 years. Actually, maybe not with these people. So you should watch for that first, yeah.
Treasury management is usually, this is a topic I've seen. So one of the biggest problems I've noticed in crypto and with ICOs is that the events were not seen as funding. They were seen as sale events, because
Token sale.
Token sales. So there's a big difference in terms of responsibility. We sold an asset, now we have money in the bank, but we don't need to use all that money for what we're doing. I can just buy the Lambo that I always wanted, and with a bit of the money I can do stuff.
Lambo maybe, or like maybe.
2 of them, or okay. So this type of treasury management is actually stupid. It makes no sense to. I mean,
It's illegal as well.
Well, no. And this is why it happened, because it wasn't illegal. You sold an asset, you got the money, and the perception was we didn't fundraise, we sold an asset. So from this perspective, it is a different thing how you do things, and this shaped the behavior of treasury management. Now, if, let's say, you get older and you've been through several companies and you managed your own money, it's easier to understand, okay, how do you manage? At the end of the day, it's the make it or break it. So either you settle for 1, 2, 3 million, or you make the company or the project be 500 million, a billion, or whatnot. That's the end goal. So in terms of how do you manage this? Okay, you have DAOs. I'm not in favor of those because it's easily distracting. So, okay, you make a DAO and then a group of people decide what happens with the money. But in terms of a startup, that's suicide, because you need to make decisions. And it's not that money gets wasted. It's for them not to be wasted on stupid things, but they will still be wasted because you take bets. And usually bets don't work out, regardless of your intention. You have a good intention, you have all the cards played out, and then you have like bombs being dropped off somewhere, and all your plans and your money that was spent go out the window. So there are events like this.
Makes sense. I want to hear from the VCs as well. Like, what do you guys see in the treasury management space? We're almost out of time, so keep this moving quickly.
So I think first you need to manage the expectations of your partners, and in this case partners is also users, but VCs, since you're talking to them first. It's totally fine from our point of view to maybe spend 2 years doing research, building the team, and then launching the product if the problem is big enough and you think it's going to be there for at least 10 years. Some other VCs maybe are happy with or they desire a token launch in the next 6 months. That's also totally fine. So like make sure that what you plan for and what you say you're gonna do that. So like mostly managing expectations.
Yeah, makes sense. Alana, about you?
I would only add the legal angle, since in Switzerland everything is pretty clear. So there are clear types of tokens that you issue. So whether it will be the sales or investment or this or that, it will be pretty clear. And then when it comes to the big amounts, it doesn't matter, then it will be the corporate structure or the DAO with a certain corporate or association angle. You can always have a treasurer. And treasurer is the role which keeps you for the audit, for the investors, whatever you want. It can be, again, structured different ways, but since we don't have much time, I won't go in details. But I think that to have a treasurer in a company, if you have significant amount of externally inflowed funds, is important.
So the treasurer is like the dragon guarding the treasure. No, but thank you guys. This is great insights. I know we ran out of time. Do we have time for questions?
Yeah.
Yeah, great. So let's take some questions, and then we can wrap.
We already have one amazing question, so let's just go to the next slide. What I'm gonna do though is, this is like 4 questions in one question, so I'm just gonna break it down, and we'll start with Danny, asking him the first part of this question, and we're gonna make our way to Elena to answer the last part of this question, right? So, Danny, VCs want to fund familiar things that have traction and ideally don't need funding. Do you think it's a problem? And do you think that VCs should diversify their portfolio, or is it just a normal occurrence?
I can tell you a little bit about how a VC works. When you start a VC fund, you venture into a specific type of industry, and then you have to invest in that industry. You have to, like, the people who gave you money to invest, you have to work for them. And you promised you're going to invest in X, you have to invest in X. You cannot start changing because you start drifting and then you start investing in embroidery or like weird things. So you have to be responsible with your purpose, and you also have to manage expectations on your end.
Perfect. And then let's go to Alina. Alina, how do we fund new narratives? Because if VCs have to stick within a certain domain, how do we just, as a new project, how do you find a way to convince them to invest in you before your narrative becomes popular?
I think the whole line of these questions come to one thing, is understanding and trust. So whether the VCs understand actually the product, whether it's a new or old idea, and trust it. And that trust can come from the product line, a problem solving, as we were talking here all the way, or from the team and personality who is behind that. So, but one or another thing, you need to give a clear understanding of what exactly that is. So the clarity, transparency, and if you want, education of the topic, and trust from technology and team personalities.
Paul, is venture funding, venture capital still venturing?
Yeah, one advice that I would give there is that venture capital is like the most professionalized way of investing, right? But there's other people investing. There's angels, there's funds, there's grants, and so on. One thing that I would recommend for people that are trying to build innovative things and feel that venture capital doesn't pay attention to them is to find a founder that has done something similar before and has made it and would now become an angel. Because as a founder and as a builder, you would need to have mentorship about where are you going. And there are some exited founders or successful founders that are looking to find a younger version of themselves and mentor that person and even fund them and advise them. And so I think it's much more, it's much smarter to look for angels that would be in your line of business, in your area, and that would look at what you're doing and be like, yes, that's innovative, I want to bet on you. Other than the more professionalized version of VCs where they have, LPs to report and all that, yeah.
And then the final part of this question is, are VCs evolving their understanding or just risk minimizing, maximizing?
Are they evolving their understanding or evolving their understanding of what?
Their understanding of the industry. Sorry, it's actually linked to the first part. I guess like
Okay.
the question is, are they involving their understanding of the industry and new narratives, or are they just trying to capitalize on emerging narratives and they're not trying to diversify?
Okay, let me give you an example. At WAM, when we started out, we still have 2 great guys doing business development, and they were very, we still have. No, we still have. And they were experienced in M&A, and they told me this joke. A VC walks into a bar, and the bartender asks what are you having? And the VCs, this was a VC bar, by the way, and the VC looks around and says, whatever they're having. Okay, it's more about risk minimizing, because usually VC money is for growth. When you figured out what works, you need a lot of money to just push the pedal, and that means de-risking is already in the books. So this is my answer to that.
Nice.
We just got another question, if we
Yep.
have time. I like it.
Nice. Who is Alex M? Raise your hand. Don't be shy.
The organizer.
Oh, Alex, nice.
Not a question,
It's
but
good,
great,
good,
great
good.
comment.
Good.
Can I take a stab at answer the new question?
Yeah, of course.
I think that especially technical founders have this idea that, oh, if I build something cool, I'll be successful. But building a network and being recognized in the space and having a public persona and coming on stages and talk about stuff and pitching your product is also part of building a business. It's not just the commits that you did on GitHub or the things you design and so on. I think that a lot of technical people underestimate how hard it is to actually build relationships in the space and to go to conferences and meet people and pitch your thing and so on. And in a space where we're all trying to minimize trust so that we can only trust the smart contracts and the mathematics behind it, it's really ironic that most deals and most sales and most success comes from human relationships and people meeting each other and getting drunk at conferences and talking shit.
And tweet and do a podcast. Go on podcasts. Just talk to people.
Does anyone want to answer the question about technical founders? Do you want me to read the question, guys, or the second question now? Like, how can builders without a strong network still get noticed?
That's what I was trying to do.
I
Yeah.
mean, that's what we're just answering.
Yeah,
now.
but does anyone else want to answer that question, or is it just
Any
Paul?
other, yeah.
We can open the floor, though. It's okay. We'll open the floor. Does anyone else have any
Have
more?
no shame.
Okay.
This is my advice. Have no shame. So you're building, you think it's awesome, you're building some cool
those
stuff.
lights.
Hello.
That's good. That's
Have no
like
shame.
lights on. Have no shame. I love that.
Step
That's
into
like
the
the
spotlight.
ultimate. Yeah. That's the advice. Oh, so bright. Okay. Do you have any more questions? Now that the lights are on, everyone's like, no. Oh, the lady there, nice. May I have your mic, please? Thank you, sir.
It's a good or a bad moment to try to raise money right
Can you
now?
repeat the question because
So
we're recording it?
is
Thank you.
You know, at the beginning, the panel was a little bit, is this a good or not? What's your feeling? It's a good moment, yes or no? I know your experience in 2023. I also had a similar one, and I was like, oh my God, that was the last year I could raise money, and so on. So right now, how's the situation? It's a good money for me as a builder to start to.
I think it depends what you're raising money for, what kind of industry, what kind of type of traction. We are very active.
Real world assets tokenization.
Sorry?
Real world assets tokenization.
We haven't dipped into RWAs. We're a lot more focused on AI right now. So if you're in AI, we've been very active there. That's my take. But you have to find the right partners for you and the people who are active in that space and kind of see what their cycle step is in for them.
I made my research before this, so I have numbers for you. Okay.
Yeah, I was going to say, did you just
course.
chat GPT that?
100%.
$16 billion was the token fundraising in 2024. VC investments in crypto, 2 billion. 40 billion are in DAO treasuries in 2025. So that means there's capital, right? And
Token prices are going down, so it's like 20 billion now.
and you said, okay, public token sales accounted for 83% of crypto public events in 2024. So in terms of if it's a good market or not, I would say it all matters who you know, and then the market is less disfavorable. If you just go head on, even in a good market, you might not find the right money, I would say. But there's never.
Yeah,
Thank
I would say there's not the right time to raise. Like, it's almost like saying, oh, now is the perfect time for me to get married, or now is the perfect time for me to have a child, or it's the same question. just go for it. Yeah. It's never the right time. Just go. Yeah.
One more question. I have time for one more question. Anyone else? Okay, I'll ask the final question. Can you all give me quickly one piece of advice, a practical advice for founders that they can do right now once they exit this room and improve their fundraising probability?
I'll just say it again, have no shame.
Tweet about it. Like, actually say it publicly that you want to raise money and how much and by when.
And tag Paul.
I think this is very similar to Paulo's advice, is become a key opinion leader in that space, like become a thinker, write as much as you can about those types of ideas and those types of problems.
Exactly the same what I wanted to say, so I'll try not to repeat. Educate. Do all this, be public, but educate. Talk about why you do this, what it actually gives, but don't sell. Really show why you love it, why you do it, why you waste, spend, or dedicate your time to this.
And I would say talk to your customers or your future customers and hear about their problems every day, if you can.
Thank you. Thank you so much, guys. Please put your heads together for the amazing panel.